Hello everyone, I'm Nova Lui, RHB Bank, Head of Investors Advisory. Welcome to our monthly investment insight. News of US government shutdown continue to loom the economy. However, impact to equity market is likely to be minimal by now. Since 1981, US government has shut down as many as 10 times. US Fed continued its rate pause in November. With lower than expected inflation data released in the same month, investors are more confident that US Fed might likely reach its peak of rate hike cycle. Moody's lowered its outlook on US AAA credit rating to negative from stable, citing large fiscal deficits and a decline in debt affordability. Treasury yield edged marginally higher in London, with analysts expecting little impact given prior downgrades of the US rating. Hamas attack on Israel on 7 October sparked concern in the global market. Investors' flight to safety drive US dollar and gold price higher, with gold price breaching above $2,000 per ounce. However, gold price did not sustain long at such level, which has came down gradually from there. Gold price has not been able to sustain its level higher than $2,000 per ounce level for the past 30 years. China's Golden Week spending is an important gauge of the China consumers' spending power. China concluded its Golden Week holiday on a muted note, with key travel and spending data showing weaker than expected recovery in consumption amid a wider economic slump. This continued to spark concern on the China economy. In October, China's bond market was greeted by unwelcome news of China's biggest property developer, Country Garden, missed its final deadline for an interest rate payment on dollar bond, putting it on risk of default. Investors are concerned of the potential real estate crisis in China and its potential spillover effect to other sectors such as banking and financial, heavy industry, and the commodity sectors. In the same month of October, Malaysia's 2024 budget announcement did not show too much of surprise to investors on top of what has already been signaled to the public. Equity market was lukewarm, with KLCI relatively flat post the announcement. Bank Negara Malaysia maintained the overnight policy rate at 3% for a third straight meeting, and as predicted by all 21 economists in Bloomberg survey, the last hike was in May 2023 for 25 basis points. While KLCI is defensive, the ringgit is not. Ringgit is the second worst performing currency in Asia after Japanese yen on year-to-date basis. In Q4, our view is slightly overweight in fixed income over equity, mainly due to the prospect of rate pause likely to crystallize soon, while investors rewarded by locking in position in among the highest yield possible in recent years. However, within equity market, global technology, especially on artificial intelligence related themes, appear attractive for a long-term growth prospect, with any pullback from the equity market is a good opportunity to accumulate. Malaysia's equity market has to be very selective, with broad market do not show material catalysts for rebound besides being relatively cheap on valuation. Investors may look into our income investing strategy to form a core holding in your unit trust portfolio. Please engage our relationship manager to know more about this. Thank you for tuning into our podcast.